Welcome everybody to the Landsite's webinar with Tab. I'm delighted to have you here. Duncan Kreegar, who will be making the presentation for Tab, is the founder and CEO of Tab. He founded Tab in 2018 and has built a dedicated team of property experts to deliver property finance solutions, including bridging loans and development finance, and also property fractional ownership investments. It's a fresh concept into making UK property accessible to the masses. Prior to founding Tab, he co-started one of the UK's largest non-bank lenders in the UK. He's a serial entrepreneur and property expert, and he has over 2 decades of experience in alternative lending space. So is well equipped to deliver today's webinar on exploring the evolving landscape of alternative finance. So welcome, Duncan, and I'll hand it over to you.
Thank you very much. Thank you for having me. Reminded me of my 2 decades in this market, which is always good. So I'm just putting up the slides now. Thank you everybody for joining. Please just confirm that everybody can hear me.
Yes, all good.
Right. Fantastic. In that case, I'll kick off. So thank you all for joining me. We're going to talk today about exploring the evolving landscape of alternative finance. And it is always evolving, and alternative finance covers quite a wide variety of topics. Just wondering why okay. Right, so quick introduction. You just heard a sort of brief introduction about me, but Tab was founded in 2018. I am the founder and I'm also the CEO of the business. There's now just over 40 members of staff that have joined me on this adventure. And throughout my career, I have overseen and lent over £3 billion and over 3,000 loans. So I agree, I do have some experience in this sector. At Tab, we have a best-in-class team. So really important to me to surround myself with the very best individuals that I can. And to that end, we have in-house lawyers and quality underwriters, qualified accountants, an amazing technology team, and really certainly not just about me, but much more about the business and the people that we've managed to attract here. And I think important to just set the scene by saying Tab really does 3 main things. Number 1 is that we manage money. So we manage money on behalf of investors, private high net worth individuals, up to American institutions. We also lend money. So we lend money secured on property. In every case, a property will be taken as security, so we don't do any unsecured loans. And the third thing, and the lending product's quite broad, and I'll talk about that shortly. And the third thing that we do is allow investors to access fractional ownership in real estate, and that is something very exciting, huge growth area, and something that I'm extremely passionate about. So let me just run through some topics that we'll go through today. Number 1, what is alternative finance? Number 2, how does base rate impact borrowers and lenders? Because I think it's important to understand that it does impact both sides. Number 3, what does this mean for bridging loans? Number 4, looking ahead. And number 5, couldn't get through a presentation without talking about our ESG efforts, which are, again, I'm hugely passionate about. And number 6, a bit more about what Tab offers specifically. So far, nobody's told me to speed up or go slower, so I think I'm okay. Right, what is alternative finance, I hear you asking? Alternative finance basically means any type of finance that isn't provided by a high street bank. So this obviously includes specialist property finance, and non-bank lending has become a really, really important part of the property market. Number 2, specialist lenders such as Tab aren't as widely known as the big banks, but we do exist to help people and to come up with financial solutions that more rigid banks wouldn't be able to. Number three is that high street banks also have much more rigid terms, from a high street bank than you would expect from a non-bank lender, from an alternative finance provider. So some sort of obvious areas to think about are if you have bad credit, or if you had an unusual employment status, so you were paid infrequently. So there can be a number of reasons why you would need to speak to an alternative finance provider over a bank. And what I think, speaking to Tab, as I mentioned before about our staff, it's really important that we have the experience on the ground in order to understand people's requirements and make decisions around those in as quick a period as possible. So I want to talk a little bit about how base rate has impacted borrowers and lenders. So the Bank of England has obviously increased their rates now consecutively for the past 13 meetings. So every time the Bank of England has met to discuss what to do with base rate, they have decided to put it up every time for the last 13 meetings. Unfortunately, they will be meeting again tomorrow, and I don't think anybody is expecting it to go down or stay as it is. Historically, low interest rates have contributed to sustained growth in the property market. Undoubtedly, when borrowing is so cheap, when borrowing is so cheap, it obviously gives people more confidence to buy property and to stretch themselves. And my personal experience says that a lot of people have done that coming out of COVID, wanting more space, wanting not to have to move around so much, wanting a bigger garden, etc. And I've certainly seen people stretch themselves with low interest rates, and I think the effects of that will start to come clear pretty soon. There's a few more bits of information around this which I think are important. So the cost of borrowing increases for both borrowers and lenders. In fact, it increases for everybody. So when the Bank of England raises its base rate, it has an effect on all types of borrowing. I will caveat that if you're on a fixed rate for a period of time, then your rate won't be immediately affected. But what will be affected is when your fixed rate comes to an end, you would automatically convert onto a standard variable rate or a tracker of some description. So that could mean that you thought you were going to come to the end of your fixed rate and understand what your payments will be. But in reality, those payments could be much higher, and you wouldn't know what they're going to be yet. Higher interest rates also mean that it costs more money, and therefore it's less affordable to service those loans. So the amount of money that you can borrow when interest rates are higher is less, meaning that it would cost me double to service a mortgage if my interest rate is 2% instead of 1%. So this has a massive effect on people's ability to buy and at what level they can buy, and worse than that, what the level they can refinance at when their mortgage comes to an end. But also non-bank lenders face the same problem. So we, Tab is a non-bank lender. We lend money to customers as I've just described, and we borrow money ourselves from institutions, and the cost of that can fluctuate as well. And what we need to do as a lender is to make sure that we retain a margin that will keep us in business. And in some cases, that margin will be passed on to you as the customer when that is appropriate. So speaking specifically about bridging loans, because that is my specialist subject, what does this mean for bridging loans? Well, we're seeing an increase in property investors needing to use bridging loans, which is kind of counterintuitive. It's a solution where people need access to money quickly, and they need somebody sensible to talk to that understands why this doesn't fit on the just missed a question. I did mean to say quickly that I was around to answer questions, and I'm happy to do that during. I can see that somebody has asked me how high do I think base rates will go. So I'll come back to that in a minute because I think there's something relevant here. But we've seen an increase in people needing bridging loans, and really it's just about getting a viable solution and buying yourself time. And from our point of view, you don't necessarily need to take a new fixed rate 2-year loan. If something has happened that means you require another 6 or 9 months in order to repay your debt, a bridging loan might be the right way for you to go. Less options are more expensive. So I'm focused on the middle box here, if you can see my screen. High street lenders are pulling rates from the market on a daily basis, and they're replacing them with more expensive rates. So I heard only yesterday that the average buy-to-let mortgage is now in excess of 6% per annum. So that's well over double what it was not very long ago. And on an interest-only basis, what that means is if your mortgage was at 3% and you're paying £1,000 a month, that same mortgage on the same property that's let to the same tenant would now be costing you £2,000 a month. And I think that very much needs to be considered and is hugely important. Borrowers are having to find more solutions. Bridging is quick and you're not locked in. And one thing that I think is worth explaining just with a lender's hat on is that allowing people to service their bridging loans, i.e. making regular monthly payments, is a lot more difficult to justify now. So bridging loans have never been a sustainable form of borrowing. It's a short-term solution. And I've always described this as being a capital cost of the transaction. So if you take a bridging loan, you work out what the cost is going to be over 6 or 12 months. And you would add that to the total cost of purchasing this property because it's not something you want to be stuck with long term. When rates were super low, bridging rates were lower, and it made sense that some of those loans were serviced, but now much less. And therefore your net loan, the amount that you actually receive when you're borrowing on a bridging loan, can be significantly less, although you wouldn't have to service those monthly payments each and every month. So looking ahead, and this will give me a chance to answer Tracy's question. So where we are right now, we think it's really important that companies have an emphasis on environment and social governance. We're doing this at TAB in several different ways, and it starts with how we run our business, how our staff interact with the business, and obviously our customers. But equally as important, we're trying to be forward-thinking in our approach, and we'll talk a little bit more about a long-term mortgage product that TAB has been developing. And we think it's really important that properties have a solution for needing to upgrade their insulation, their heating, their technology. Every building, in my opinion, in this country will need to be touched during our working lives. So that gives you an idea of how big the opportunity might be. Lenders will continue to adapt and launch new products. So this is really, really important to TAB, but it's important that all businesses continue to innovate and to use the tools that are around them to their advantage. TAB's certainly keen to keep doing this, and we need as much feedback as we can from you guys as a customer to identify areas where you think we might be able to help. This interesting fact, sort of leaning into some of the other things that I've discussed today, is that 300,000 people a month are coming off fixed rates at the moment. So lenders do need to provide solutions, and I think the Bank of England needs to be aware as well, which no doubt they are. And I've put my base rate stabilizing column as far across to the right as I possibly could. Had that gone further into 2025, I probably would have pushed it further. So I guess to answer Tracy's question of how high do I think base rates will go, on a personal level, I can see it starting with the 6, and I can see that happening this year. Quite concerning. I think everybody should be making plans for this year, next year, and the year after. And then I think it will be there or thereabouts and start to trail off really at the end of next year. So into the future, I do think obviously base rate will normalise and stabilise. The question really is I guess my question to myself would be, and a follow-on is, where do we think base rate will stabilise? So I don't think 1 or less than 1% is a normal base rate. And obviously we talked before about people taking advantage of the low interest rate environment. I think around 3 or 3.5 would be normal. If you look forward for the next 20 years, I'd like to think that we'd be sort of well under 5, and certainly not anywhere near 6. Hope that answers your question, Tracy. So let's just talk a little bit more about ESG, because I do think it is really, really important. Environmental is about how a company improves its environmental policies and practices, I should say. And we as a business have tried to identify elements where we can have a real impact. And it can be as simple, and people ask me about this all the time, but it can be as simple as recycling and having a plan for what you do with your waste, and obviously your lighting and your heating and everything adds up a lot. If these things stay on 24 hours a day, they're obviously used more than double than they would be if they were just turned on for the hours that you need them. Social is something that we really shouldn't need too much encouragement, but what does a company do to improve its social impact? For us, it's really about charity and community. So we try to give up our time, give up our money, and give up our ideas and those around the business that have specialist skills. I think it's really, really important, whether it's ESG or not, that everybody takes some time out of their day to try and help somebody else. And it's interesting to see in this ESG format that that's something that people need educating around, but from our point of view, we try to lead from the front, and your actions are more important than your words. So hopefully you'll see that from anything you see about TAB. And governance is really the way a company's management is run, and my expertise around this is more about how it's documented. So it's one thing to have lots of positive, meaningful conversations, but action, as I said previously, is really, really important. So what we try to do is document things and hold each other accountable for action points. And I think you'll start to see how ESG has affected us as a business, and even more so our product range. All good? Excellent. No more questions have come through, so I presume everything so far is clear. Please feel free to jump in and ask anything as it comes up. And what I'll do now quickly is I'll talk you through our product range. So you can see in this circle on the right-hand side, I'll just quickly run through, starting at the top. We do bridging loans secured against residential property. We do loans against land with and without planning consent. Not our favourite type of security at the moment. We do development finance, which would allow somebody to buy a piece of land and develop and build a property on it, which we would support the land loan and the development finance, so the build loan as well. A similar type of product is what we call refurbishment loans. So this is where work is required at the property, but not a complete and utter new build. We also have TAB property product, which I said earlier, I'm hugely passionate about. So where historically investors who sign up with TAB are able to invest directly into bridging loans as we make them available. What we're doing here is giving people the opportunity to invest directly into property investments. So if we bought something for £100,000 and you invested £10,000, you would actually own 10% of that property and you would be entitled to 10% of that property's income. And if you sign up on our website at tabhq.com, you'll start to see these opportunities as they become available. And then the last two on the left-hand side are around commercial property. So commercial property, bridging loans, we lend against residential and commercial property. So we're not specific to either one. And we also lend that on a first and second charge. And the commercial mortgage, really, the best way to describe it is a professional landlord mortgage. So we're really excited to be launching a 10-year mortgage, which means that as well as being able to come to town for your short-term solutions for a bridging loan or development finance, we'll now be able to assist with the longer-term solution, which I'm really, really excited about. So questions come through from Gail, which says, what was the motivation to launch an ESG product? Hopefully I've sort of given some flavour to that, but I think, you know, action speaking louder than words is possibly the best response I can give. And I think my personal frustrations around seeing people talk about ESG products, but only really linking it to one element, which is your EPC rating. So from that point of view, we felt there was an opportunity to do something more. And Gail, I'll come back to that again, because there's a slide coming up on it. And Tracy's come back with a question, which I'll come back to shortly. So just quickly run through on the left-hand side of this tab products page. I will share this with you when it becomes relevant. So let me talk quickly about this tab mortgage product, which hopefully will answer Gail's questions a bit more clearly. So we believe that the tab mortgage is the most comprehensive ESG product on the market. And we're really, really keen to understand if people think that we aren't. So the three ways in which we reward people for having positive ESG outcomes are obviously around EPC, because it's easy to measure. But what we're doing is applying increased discounts depending on whether you get to a C, a B, or an A rating. So we think those that try the hardest should be entitled to the highest discount. There is also a sustainability discount, and there are a number of different ways that people can apply for this. Obvious ones are around having a sustainability plan, for example. And areas where we want to support social efforts would be something like working with the charity or having charity as a tenant, and building these things out within either your business or within the property itself. So we're really, really excited to be launching this product, and the motivation for launching this product was wanting to serve our existing borrowers. So those with same property, same borrower, same requirement, those people that we've worked so hard to build trust with and to build a relationship with, we really wanted to be able to offer a solution that didn't mean they had to go elsewhere to one of our competitors, and especially those where they have an emphasis around making a difference via their ESG efforts. Then those are the people that we want to align ourselves with. So that's the motivation, Gail. And any questions takes me on to Tracy's question, which is interesting, because what are the challenges facing short-term lending at the moment? It's difficult. I mean, the challenges facing any lender is the fluctuation of property prices. So with bridging loans specifically, we're only looking, say, 12 months into the future. So it can be very, very difficult to accurately predict what those prices will be. I feel it's easier to predict what it will be over 5 or 10 years. So I think it can be difficult knowing how to pitch risk, and absolutely from a pricing perspective, we felt that it would be virtually impossible to try and guess what to charge people. And therefore we made a huge effort to move onto our lending to be tracking the Bank of England base rate. And therefore what that enables us to do is to maintain our margin and only pass on the additional cost of capital to a borrower when it affects us directly. And what I felt was really important was that we didn't keep lending, convince ourselves everything would be okay, and then find some time later down the line that loans aren't profitable or worse, could cost us money to lend. So there are unusual challenges to communicate, but there are challenges from a lending perspective, and it's my job as the CEO and the leader of this business to make difficult decisions to ensure that we stay on track. Somebody called Katrina has asked if there's any advice for property investors during this unpredictable time. And I think one thing that's really important to me is the uprising of fractional ownership. So please someone stop me if I go over time or if there's too many questions. Once you get me talking about fractional ownership, I could be here a while. So currently there's been no way to invest in small amounts of money in multiple different properties. The only way to buy a property historically has been to save a massive deposit, the largest amount of money you've probably ever had, and then match that with 5 times more debt from the bank. So to buy a £250,000 property, roughly you put 50,000 in yourself and borrow 200,000 from the bank. That is really difficult. It's difficult because you're putting all of your money into one asset. It's extremely difficult to get your money back afterwards. And it's management intensive, and there's a lot of lessons you need to learn super quick. So I think my message is that for investors who want to get into property should be trying to mimic more what we've seen in other asset classes like gold and wine and art and cars. You don't go to Hatton Garden to buy a gold bar and put it under your bed anymore. If you decide to invest in gold, you go online to the Royal Mint, you click a few buttons and you start building a portfolio. And that's my vision for real estate. We're really, really close as well. So we're launching a couple of commercial property investments that will return over 7% per annum to investors paid monthly. And you can have a smaller share or as large a share as you want. So to give you an example, that's a £3.7 million purchase. And if you wanted to, you could invest from £1,000 into that property. So we are done. One more quick question from Karen about what types of properties we'll be offering, and we will be offering lots of different types of properties, and that really is the benefit from a TAB perspective, that you, with loans as well, you get to build up a portfolio as you wish and as you see fit. So thank you very, very much for joining me. I hope everybody found that useful, and I will pass back to our lovely host.
Thank you very much, Duncan. That was great, very informative, very interesting to see what you're doing there, and lot of interesting stuff. So thank you very much. We've reached the end of our time, and I know our participants and attendees are going to be pressed for time. So I will thank you, and we'll close that. And we look forward to seeing you on another webinar soon, Duncan. Thank you very much.
Very well done. Thank you very much.
Thank you.
Bye-bye.
Bye-bye.